Greetings everyone, Joseph James here from SchoolTrade.com with your term and quiz of the day. Guys, if you're unfamiliar with how this thing works, it's real simple, kind of fun too. You might just learn something. We have a raffle every month. We give away thousands of dollars in free prizes, guys. There's going to be a quiz at the end of this video. It's real simple. If you know the answer to the questions, simply click on the link below the video in the description and post your answer on our blog. The first 5 correct answers every day will qualify for up to 20% off the advanced course. That's an $800 value. We give away free mouses, free flat screen monitors, free beginners courses, and guys, the rules for this are all posted as well in the description. If you have any questions about how the rules work or whether or not you're a winner from the last raffle, email our sales team, sales@schooltrade.com, and they can give you guys all the information. Let's talk about the term of the day today. Dollar index, the dollar index futures, the DX symbol here. Now, a lot of people are unfamiliar with the dollar index. I want to make sure you guys are aware of this. The US dollar futures index, right? The DX. It's off the Intercontinental Exchange, the ICE. It's the most widely recognized publicly traded currency index in the world. It compares the USD to a basket of currencies. It's open 22 hours a day, and it's 100% electronically traded on the Intercontinental Exchange, the ICE exchange, and the symbol is DX, as in dollar X-ray. Okay, some more information about it. Now, we don't trade the dollar. Okay, it's actually too low volume. Now, you might ask yourself, right, how can something so low volume, if you say, Joe, how can that move the other markets? How can it be so important if it's so low volume? Well, the answer is because the dollar is the denomination currency, right? What are euros settled in? They're settled in dollars. What is crude settled in? It's settled in dollars, right? Gold, pound, Russell, S&P. Guys, everything is settled in US dollars. Now, until that changes, right, the world's reserve currency, we'll use the dollar index futures contract for correlations. In other words, we watch the dollar, and the dollar will tell us what to expect on other markets such as crude, gold, currencies, E-minis, commodities, right? Fixed income. All of that stuff can apply to the dollar. Let's take a look at some of the more popular, the crude oil and the gold, and we'll compare because they're very similar. Okay, it's a negative correlation. Okay, so the dollar rises, crude oil should be falling. If the dollar is slow, the crude oil market should be slow. If the dollar is flat, you guessed it, crude should be flat as well. Can anybody guess how that correlation works in the gold? You better believe it. Very similar, right? Dollar versus gold, the GC, right? Another commodity, a negative correlation. Dollar rising, we should see gold falling. If the dollar is flat and sideways, so should the gold. Okay, now what's the most important thing and how do we use this dollar index? The correlation is really simple, right? Negative correlation. Dollar goes up, everything else goes down, right? That's pretty simple, right? But how do we use it? I'm going to watch 3 important pieces of the pie. The slower time frame, the fast time frame, and the pace of the tape. On my slower time frame, I'm looking for things like the overall trend, the major support and resistance levels. Okay, today on the dollar, we saw a couple times where the dollar was sitting there on support. And when the dollar sits there on support, then we know the crude should be having resistance, right? Negative correlation. So we look at the slower time frame for major levels, draw some trend lines, use your trigger lines, and we're looking at the overall trend. Now, in the fast time frame, much different. Okay, the fast time frame, I don't care about what happened more than 5 minutes ago. The fast time frame, all I watch is that short-term trend direction. Okay, so in the fast time frame, I want to see price really moving quickly. Fast time frame, only focus on the most recent price action. Right? Once it's 5 minutes old, it's old. I don't care about it anymore. On the slower time frame, I look at 90 days of data. Right? Long-term highs and lows, long-term level support and resistance. Compare that to the fast time frame, very different. And then last but not least, look at the pace of a tape indicator, the speed of the price action. Right? We know that if the dollar is slow, everything else is expected to be slow. We also know from experience that if we watch the dollar begin to start growing in speed, right? Dollar begins to move a lot faster, that's going to result in the gold, the crude, the euro, the Russell, the Dow, or everything else will start moving in speed. So watch the speed of the price action on the pace of the tape. Okay, so once again, here's my slower time frame. I'm going to look for trend lines, my major levels, right? Overnight highs and lows, monthly, quarterly, weekly highs, double tops, double bottoms, the overall trend. Then, of course, in the fast time frame, all I care about is that short-term trend. What's happening right now, right? I don't care about what happened yesterday or even more than 10 minutes ago. what's happening right now on the fast time frame. And then last but not least, watch the pace of a tape indicator. That will tell you when, of course, we have slow price action. All right, guys. Now, again, how am I going to use this, though? What do you think is the most efficient, right? What's the most efficient way of using it? Well, if you're watching your slower time frame, make sure there's no trend lines in your way, right? Make sure there's no support and resistance in your way, and beware of that sideways chop. Okay, so looking at the slower time frame, make sure we're not trading into a trend line. Make sure we're not trading into that trigger line. Make sure we're not trading into any double tops or double bottoms. On the fast time frame, just make sure we have a well-defined trend. And be careful about sideways, choppy price action on the fast time frame. It's easy to go from looking like this, right, to then looking, well, like this on the fast time frame. Okay, very easy to be trending up on the dollar, and then all of a sudden things start going sideways, like you see here. Even though this is a slower time frame, you can kind of see the way the price action looks. Okay, want to be aware when a slower time frame starts going sideways price action, never going to be a good idea. Okay, also wait to see increasing yellow or green pace of a tape to tell you when to get in. Now here's what to avoid. Okay, here's what to avoid. When I see this on the dollar, I want to be very careful. Okay, beware of this stuff. If I have a trend line in my way, if it's sideways or choppy, and if there's no overall trend, be careful. On the fast time frame, if I'm seeing double tops or double bottoms, if I'm seeing no clearly defined trend, if I have a flat trigger line, also another heads up to be careful in the dollar. The pace of a tape indicator. If I see decreasing red pace of a tape, that means slow and sluggish price action in the dollar. It means be careful. Things are probably slowing down. All right, a lot of information covered here, but the quiz today is relatively easy. All right, quiz time. Keep those eyes on your own screen here. Pens and pads away. All right, guys, we watch this market first, and it compares the USD to a basket of currencies. All right, what is it? We watch this market first. This market is the catalyst. And this market, even though it's a small market, it's very effective because it compares the US dollar with the basket of currencies. Is it the Euro currency futures? Is it the dollar index futures? Or is it the Russell E-mini futures? You guys know the answer? If you know the answer, you're probably paying attention out there, so good luck on the raffle. If you know the answer, simply click on the description right below the video. That will take you to our blog and post your answer on our blog. The first 5 every day will qualify for a free beginner's course. It's a $50 value. 20% off the advanced course. That's an $800 value. And of course, guys, if you want more information, just email us, sales@schooloftrade.com, or jump on Skype at SOT Sales on Skype. As always, thank you so much for participating, guys. Hope you do well in the quiz. Good luck on the raffle. That raffle will be coming out, let's see, a couple weeks from now, April 15th. We'll see you guys in the room tomorrow morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.